of numbers and lots of earnings reactions have been pouring in. So let's look at the next company. Blue Star is the next management on our show. The company reported a pretty good set of numbers for the third quarter. Revenue and PAT were in line with the estimates. Margins actually were above the street poll as well. Growth was led by the EMP and the UCP segments. We have with us Mr. Veer S. Advani, Chairman and Managing Director at Blue Star, joining in to take a couple of questions. Mr. Advani, great to have you on. So, both the segments that I just mentioned, they've really been on a great curve. And even overall, if I look at the blended number, the revenue is up about 25%. The margins moved to 7.4%. So let's start there. Is this kind of a solid show sustainable, specifically on the margins?
So good morning. Thanks so much for having us. And thank you for opening with that. We've had a good quarter. I think you saw revenue grew 25%. EBITDA has grown 35% to 209 crores. EBITDA margin also improved. You would have seen EBIT improvement in segment 2. We moved from 7.1% to 8.1%. That was primarily on account of volumes and economies of scale. And then you saw in segment 1, which is our projects and commercial air conditioning business, very strong revenue growth of 32%. EBIT margin slightly lower at 7.6%, but holding pretty firm. We really attribute all of this to largely due to scale as well as controlling our operating costs.
What's really interesting, Mr. Advani, is that you've done so well in the unitary cooling products, division. Like you mentioned, the top line's been good, the margins are good. But some of your peers in the industry, I was looking at Voltas's performance in the same segment, and they've faced a lot of margin pressure. So clearly the trends are different between different companies. But let's talk about the AC segment and whether you expect similar growth to continue. So for the year as a whole, what will the growth be? Or is this a bit of pre-season inventory filling phenomena that we've seen? And what should we expect from the AC business?
Room AC air conditioner business, as you know, is in segment 2. We have the commercial air refrigeration business and the room AC business. So as room AC is concerned, it was a good quarter for the industry. I think industry grew quite well. Blue Star also did well. I think a large number of our competitors also did manage to grow some market share. Blue Star on a standalone basis in Q3, we believe that our market share would have touched 14% for the quarter, which is an all-time high for us. We've been trying to get to 15% on an annual basis for a few years now. We're inching up there. Of course, on a full year basis, we will still not be at 14%, but we're very happy with the Q3 result that we had. Of course, there was pre-buying before the season started. That usually does happen in December. But we're expecting a good Q4 for the industry. Obviously, for the full year, it'll be a strong growth because it was such a great summer. But on a ongoing basis, we expect the business to grow at about 20 to 25%. For the industry to grow at that level, and Blue Star should grow a little faster so that we achieve our 15% market share goal. Overall demand is good. And of course, there's some headwinds around liquidity and a little bit of consumer uncertainty around spend. That's true of the entire all consumer products, but I think air conditioners have been an exception. We continue to see growth at this 20 to 25%.
All right. Hi, Mr. Advani. Since we're talking a lot about your competition as well, and no doubt your numbers look good. We're waking up today. Your stock is a little under pressure, but you have Voltas that's down 10%, and you have Whirlpool that's down close to around 20%. I need to ask you this. Would you have thought of looking at maybe taking a stake in Whirlpool, since the promoter entity wants to reduce their stake? 75% has come down to 50%. Now they're talking about 20%. And if you thought about it yesterday, today you're getting it 20% lower. So will you all be looking at it? Because you'll get 30% of some competition here in India.
So frankly, I think we've explained our long-term strategy to you and to the market. Yeah. We are a focused air conditioning, refrigeration, and heating company. We have global ambitions. We don't look at just India as a market. We look at the Middle East, the US, and Europe. So, but we want to stay focused in our area of expertise, which is air conditioning, refrigeration, heating. In that context, moving into consumer durables, a wider portfolio for the Indian market doesn't fit our strategy. And so we're unlikely to make that move. But like we do with everything, we're very keen to stay connected with the larger durables industry. So, we may have a look at what Whirlpool is about, but no intentions of an acquisition.
Okay. Got that. That's pretty clear, Mr. Advani. Good morning, Prashant here. There is just one more thing, not very specifically related to Blue Star, but right. And again, I'm bringing in the competitor Voltas here. How is the view now evolving of actually, outsourcing some of the manufacturing to making it in-house? Because Voltas moved it in-house. Could you give us a sense, some perspective? I mean, from an investor point of view, actually, if anything, it's not really helped them in that sense. How's the view evolving on this?
So, we have been a manufacturer for several years now, now several decades. So for us, it is part of our strategy. It is integral to our growth plan. I think that we've talked about this before. It is very difficult for any organization, Voltas or any other company, to transition from a buy-sell to an in-house manufacturing business model. But, it is a transition that all companies are taking and need to take. So I think, as far as our competition is concerned, we expect that over a short period of time, they should get that whole operation under control. There's no reason why they would not be able to do that. They are an engineering company just like us. So I'm fairly certain that they'll get that right. I think it's the right decision that they have taken to move away from contract manufacturing to in-house manufacturing. There is value addition, there's quality control, there's inventory management, there's so many benefits of it. So I think it's the right decision they've taken. It may just take them a little longer to stabilize that operation. As far as we're concerned, our investment plans, we have two large investments that we're making currently that are underway. One is an expansion of our own room air conditioner production volume in Sri City. We're commissioning phase 2, and then we'll start phase 3 very soon. The other big investment for us is in commercial air conditioning. You may know we've not made a capex investment in manufacturing in commercial air conditioning in some time. So we are now doubling the size of our Dadra factory, where we manufacture VRF systems, ducted systems, and heat pumps. So that's another big expansion for us. So a lot on our table. We have to stabilize these capex investments. We're very focused on return on incremental capital, and that's where we'll stay focused for the coming year.
Okay, all right. So, Mr. Advani, then let's round it up with some numbers and maybe some projections that will help us map the coming year as well. Given that both the AC business, the UCP business and the EMP business, both have done so well for you and you sound quite optimistic, at a headline level, what is the growth trajectory? What should we expect by FY25 end? And blended margins for the company. I mean, I don't know if we didn't get a chance to speak about pricing and competitiveness, but if you could just tell us at the headline level, where do you see margins stabilizing by the time we end this year?
Sure. So it is a hyper-competitive market. Pricing is extremely tight, as you would imagine. Even though demand is strong, every competitor wants to add market share, just like we do. Everyone's made large investments through the PLI, as you know. So everyone needs to get that return in order to collect the PLI. So it's a hyper-competitive market. Pricing is tight. Having said that, on a full year basis, we've always spoken about segment 2 EBIT to be at about 8 to 8.5%. We're confident we'll do that. Segment 1 around 7 to 7.5%. Again, that should happen. We didn't talk about our projects business. That order inflow as well as execution has been good. And so that has also contributed to segment 1 performance. Of course, we're expecting infrastructure demand to pick up as public capex restarts. And we're also hoping that some private sector capex picks up so that we have a strong opening to the next year. I think as far as Q4 is concerned, we're well on track to execute our internal plan. Of course, a lot depends on when the summer sets in. You remember Q4 last year was a very large quarter for the industry. And so we're up against, we have a large base to build on. but we're confident about delivering these numbers. On an annual full basis, I think 20 to 25% is what we're aiming to deliver.
All right, we'll leave it there. Mr. Advani, thank you very much. Really exhaustive conversation and lots of perspective there. Appreciate it here on CNBC TV 18 as always. Well.